Hi, I wanted to let you in on what I'm up to outside of talking to everyone about IBC and all that. I I started repairing my roof, putting on a new set of shingles onto my roof, and it's something that I've done before, I've done in the past, but at this point, it was a very thoughtful thing where I knew last year that it needed to be replaced, and I had gotten quotes and all this other stuff, looked up materials, my cost versus, having somebody else do it. And because I've got a little bit of experience with it, when I got the quotes, I was a little surprised, like all of us are being surprised these days, right? With inflation and whatnot. And so it took me a while. It took me a while to get started, to get it in my head to get started. I hesitated. I know my wife was not really all that geared up for me to get up on this roof. This roof is a 9/12 pitch. To some that might not seem that steep, but for me, it's pretty steep. You can't walk on, in other words. You have to have support. Meaning, you got to have planks up there. You've got to. I have ropes that I can tie myself off with. For the security of being up there. And so it took me a little while to get my head straight around it to decide to move forward. And I've had some help. Certainly didn't want to take this on by myself. But, these days everybody's pretty busy, so they've shown up somewhat sporadically. But I've kept on going, meaning I've put, and also I know myself well enough now physically that I'm not going to work 8 to 10 hours in a day unless I want to take the rest of the week off. So I'm only taking little pieces of it at a time, meaning 3, 4, possibly 5 hours, especially in this heat. And I'm underway, and I was thinking about it today after I had gotten myself all cleaned up and all that stuff, and time to sit and have a little bit of quiet time and all that. And so my thoughts gravitated to that because it's something that's consuming a bit of my time, and I started thinking about how one of the reasons you do it is because you want to protect your investment, right? You have, I got 3 bedrooms and, a master suite and, got all this stuff. And I renovated an area in the house a few years back to make a nice office, which you could consider this my office, but in the summertime, because I spend a lot of time out here talking and emailing and all the work that I do. So I'm going out on early morning, working for 3, 4. I've worked 5 hours. But I was thinking about how this is me protecting the asset that I have been building equity inside of. And I want to protect the new office space, all the rooms, everything that we've done to the house. I want to protect it. And hopefully, the equity inside the home continues to grow. And you want to protect that equity. Because if the roof goes and you start leaking, the cost of repairs and all that. So you got to take good care of it, And I'm thinking, I always gravitate to thinking about how this analogy or analogies, because I've done videos in the past that are like analogies or stories. And I'm thinking about how we start off, you buy a house, right? You have a down payment, you have closing costs and all these other things. So you're putting out a bunch of capital to get going, And in the beginning, it's pretty slow, meaning that your monthly mortgage payments are going primarily to the interest on the loan, and very little of it's going to principal. So it's a long road if you've got a 30-year, 40-year mortgage. So anyway, I'm thinking about how I'm trying to protect the house, similar to the whole life policy protecting my family in case I were to pass early. So I'm protecting everything with the house, meaning the tools that are in the house. I have a workshop down in the basement, all the toys, and things that we use for maintenance around the house to keep the maintenance up. And also, have fun with the house too. So again, I want to draw the analogy, the commonality, where the policy is the same thing. When you start building capital inside the policy in the beginning, it's pretty slow. And you may actually put it off, right? You might say, well, I don't feel really comfortable about this just yet. Maybe I need to learn a little bit more, but there does seem to be something here. Maybe I should dig a little bit deeper. Because there's so many differences within houses, right? There are all different kinds of houses, different sizes, different shapes, different acreage, how things work in different states and all that other stuff. And it's similar with the insurance, life insurance, in that not all companies are the same. We have stock companies, and we have mutual companies, and we have fraternals. And inside each one of those areas, all those companies are different. It really is reflective on the management, right? However the management thinks and feels about things. So, as you've probably heard before me say, that I only work with mutual insurance companies that have been around for 100 years or more. And the two primary ones that I work with have been around for 140 and 160 years. And they have consistently been growing. They've been consistently paying out death benefits. They have never missed a death benefit. And so it's really important to see the differences, in the intricacies of difference between mutual and stock companies, but also mutual companies within the whole mutual world. And there's not nearly as many. I think it's probably 20 times more stock companies than mutual. And you want to be working with a good one so that they don't demutualize and all that other stuff that's gone on in the past with companies. But if you are with a really solid mutual life insurance company, it's a very different experience than potentially with a stock company, where they may or may not share any dividends. You are not an owner of the company, as you would be with a mutual insurance company. I want to own what I put my money into, so to speak. So I put my money into this home, paying the mortgage each month. I want to have a say on how we live here, how we take care of it, and all of that, and how I have a voice within the company. Anyway, so the capital that I'm building inside, or I can call it capital, equity inside the house, I'm also building equity inside the policy, meaning cash value, the death benefit is also growing. And actually, the death benefit actually pulls the cash value to grow too. So it can be considered, it could be looked at, bear with me, but it could be looked at as equity inside the policy that is growing. And if you take a loan and then pay it back as you should, being an honest banker, thinking like a banker, you put the money back in. So you are both the user of the policy and the banker. So you have to have both hats on. But to be able to treat the policy with respect, you pay the loan back. And over time, right, because that's how wealth grows, over time, generally speaking, in this day and age, there are some rocket ships, but generally speaking, it grows over time. And how we use it, how we care for it, is how it will grow. If we're an honest banker and we pay back our loans, we get to use that money again in the future. You might say, well, I don't want to pay interest on this. I don't want to pay this loan back. Well, if you had any other business, right? If you had a construction business and you were building houses, and a client said, well, how about if you give me a little discount, I'll pay you in cash. Well, first off, that's illegal. And second off, if you take the $100,000 in cash and just stick it in your sock drawer and spend it as you see fit, that's not being honest with your business. That's money going out the back door. And that's going to hurt your business. Over time, that will hurt your business. So it's also how you take care of your home here, this home, how you take care of the policy. You are both the banker and the user of. So you have certain control of the policy. You have liquidity inside the policy. Unlike the home, I mean, you can go get an equity loan if you can get one, right? If things get really tight with the economy, as they have in the past, the banks tend to scrutinize even further and may not give you a loan when you have equity in the house. Just because they can. They're the ones that are in charge. You've heard the phrase, those with the gold make the rules. Well, in that sense, you can look at them having the capital as the gold, if you will, and so they're in control. But if you have a policy with cash value inside, you're in control of that pool of money. So you have control, liquidity, and you have the use of the capital any way that you wish to use it. We've used it inside of our policy to put this fence around the yard. A few years back, that was when we first discovered this. The first year we borrowed money out of the policy to build a fence, and then we paid it back. The roof is being financed with it. I just had a retaining wall out front of my house redone. That was paid for through the policy. And I immediately set up a program to send money back into the policy, to pay it back. And it's the same thing that I would do if I had a savings account down at the local bank or online. I would take the money out of the savings account, pay for the retaining wall, and then I would start saving again for the next item. The difference being is that I'm not taking the money out of my policy. I'm borrowing it from the bank, from the insurance company, from their general fund. And as I pay it back, if I send $500 a month, all $500 goes to the principal. None of it goes to the interest, even though interest is accruing. But I'm knocking down that principal in a bigger way because none of it's going to interest. It's all going to principal. And so it's lowering the interest rate or the interest accumulation faster. That's another side note about taking loans. And then we're building equity inside the policy, and and we're building it every single day because we never actually remove our cash from the policy. So it compounds for the rest of our lives as long as we keep the policy in good standing in force, right? So control, liquidity, use, and equity. I want to acknowledge that this came from Prosperity Economics Advisor Group, which I am part of. Kim Butler has an organization called the Prosperity Economics Movement. And this is her core thing, the acronym is CLUE, for control, liquidity, use, and equity. So I guess the point I want to make here is that all good things do take time. And for me, it started off that I had to take time just to get it in my head, because everything starts up here, everything, for everybody. And I had to get it in my head that I would be okay getting up on this roof at my age and my physical condition. You know, I'm in pretty good shape, but it's generally a young man's game to get up on a roof with a 9-12 pitch. So I just want to say that if you give yourself the space, the grace, the confidence to start, because once I started ripping off the old roof, which I would equate to ripping off the old ideas about how to have a pool of capital other than inside of a bank down the street. Have a pool of capital inside of a system, a tool that acts like a bank for you, or it's a policy. That's all it is, and it's specifically designed for IBC, Infinite Banking Concept. It's designed for you to be able to use it throughout your whole life. And the older type life insurance policies used to take a little while before there was cash value. But designed properly, cash value shows up immediately. And when I say immediate, 10 days after you start the policy, fund it and all that, you have access to cash value. Depending on how it was designed will depend on what it is that's there for you. And like I said, the first year we utilized the policy for the fence that I'm looking at. You can't see it, but maybe in other videos you've seen it. Right out of the gate. And then we paid it back. And all the time that we were doing that, our money was growing. There was a little bit of interest that we did have to pay, but that would be true whether we borrowed from a bank or paid cash, because if you pay cash, you're giving away opportunity cost of that money forever and ever. You'll never make any money off that money when you pay cash for things. So inside the policy, our money continued to grow. And then once we paid it all back for the fence, all the money was back in there growing inside the policy, and there was no drag from interest from the insurance company. We always pay interest on everything, whether we pay cash or we borrow from somebody else. Somebody is profiting from it. So I would just ask, would you want, I know I did, I wanted to be able to control that and grow the money even while I was using it. So it's doing something in two places, and you can get it so that it can do 2 or 3 things at one time. Have your money doing 2 or 3 things at one time. So give yourself the gift of grace and the diligent habit of saving for life, meaning life happens, and it's going to happen. We're going to buy cars. We're going to probably take trips. We're going to buy whatever it is that we need for our family. We're going to buy it. But wouldn't it be better to have control of the banking function when you go to do those kinds of things? We are just coming up on our 5th year owning my wife's policy, because we started with her first. And we have gotten past the startup phase. And so this coming year, the 6th year, we should see quite a big change in the way that the money grows inside the policy. And as the years go on, it gets better and better. It gets more and more efficient. Similar to what Nelson Nash mentions, using the analogy of a, let's just say a 757 Boeing jet on takeoff, and flying through the air, 30,000 feet. It's burning a bunch of fuel in the beginning, and as it gets to its destination, the plane is getting lighter and lighter, and it's going to get, the efficiency of the operating of the plane is going to get better and better. You can't help it. It just does. And it's the same with the policy. So anyway, I'm rambling here. But I wanted to just say, if there's anything here that sounds like something you'd want to know more about, or if you have questions, if you're someone that is a client and you have questions about your policy, please don't hesitate to reach out to me and ask the question. It's an opportunity for both of us to learn. I mean, I'm still learning things about all of this. And so we can help each other. So I just try to listen to my intuitive voice, my creator's voice, guiding me. And it's been a wonderful trip thus far. And so I wish the same for you too. And I think that's about it for today. Thank you very much for your time. Please reach out anytime. I can share with you the way to think about this, how to potentially change the way you think about it, because a lot of people think that they understand whole life, when in fact they really don't. So please do reach out, share this video. Excuse me for the background noise. Subscribe and all of that. So But trust in your gut, trust in your Creator, trust in your God. If you sense that there is something here and you want to know more, please reach out. It's the only way it can happen. There's no pressure here. I just want to educate people. And if you feel that if you feel if this is something you want to start, I can help you with that. But it's your decision, not mine. And I really would like to help as many people as I possibly can. Anyway, so seek and hear your divine guidance. All right, take care. Until next time, God bless.